Making a profit in your business is a vital, important milestone. If you don't have that as one of your primary objectives in your business, then all you've got is a time-consuming and expensive hobby on your hands. And I don't want that for you. In this video, I'm going to help you understand gross profit. I'm going to show you what it actually means, how we go about calculating it. We're going to talk about the difference between markup and margin, and there is a difference, and how you can use gross profit in terms of making those vital decisions in your business. Hi folks, my name is Mahmood. I'm the founder, director of the accounting firm I Hate Numbers, and also the financial storytelling platform Numbers Know How. My mission over the last 27 plus years in the thousands of businesses that I've helped has been to increase financial awareness, help you win more battles than you lose between your ears, help you and your business make profits, save time and tax. What's not to love about that? Let's crack on with the video. Now, the idea of gross profit is that we have a figure that represents the value of our turnover, the value of what we sell, whether those are goods or services. We also have a bunch of costs, which we call direct cost or cost of sales, if you want a bit of jargon thrown in there as well. Let's think about an example. Let's assume that we have an artist who is selling works of art, and that artist needs to buy in paints, needs to buy in canvases on which to express their talent. For each work of art that's produced, let's assume they spend in the order of £20. That work of art is sold on to a happy client for £100, and that artist has made £80 worth of gross profit. Now, that gross profit is vital because every time a painting is sold, let's assume the same type of cost is being spent on materials and canvases. Let's assume they're selling it for the same price. Every single time a piece of work is sold, £80 goes into a fictional bucket. That bucket, that collection of gross profits, is vital because out of that, our artist is going to be paying for the running costs of their business. If you check out last week's video where we talk about operating profit, out of that pool of gross profit is we cover all those running costs and we're left with operating profit. Check out the show notes, folks, for a link to the previous episode. Now let's get back to the gross profit. Now, gross profit sometimes is called gross margin. And if financial people get hold of a particular metric, a particular number, we will do our best to create different terms for that. Now, that idea of gross profit can be found in lots of different industries, lots of different sectors. If your business was one of retailing, if it costs you £5 to buy an item and you sell that item on for £25, you've made a £20 gross profit. If you're a restaurateur, if you think about the cost of preparing your meal, again, let's assume that meal cost and preparation with the ingredients has cost you 10. You sell it to a customer for 25, you've made a £15 gross profit. Manufacturing, likewise. A manufacturer might make something like a table. There's the cost of the wood, there's the cost of the finishing, there's the cost of the labour to put that item together. Let's assume each table costs the manufacturer £50. If that table is then sold on to a customer for £100, they've made a £50 gross profit. What I want to explore next, having looked at the different terms, the way of calculating gross profit, is to thinking now in terms of something called markup and margin. Now, what I want to do, folks, is to plant two numbers in your mind. And the two numbers are as follows. Let's assume our artist from earlier has spent £20 on the materials to produce their piece of art. And let's assume that piece of art is sold for £100. Now, if we look at the difference, there's £80 gross profit. Now, if we take that £80, there's a term that's used called markup. Now, markup is that cash profit in relation to the cost of the item. So £80 in relation to £20 gives you that markup, and that gives you a markup of 400%. Now, we can take that same profit and we can relate it to the price that we sell it to our customer for. So now let's look at the idea of markup and margin. Let's have the idea that an item costs a business £50. The item is then sold on to a customer for £100. In pound note terms, that's a £50 gross profit. Now, markup is when we take our profit and we relate it to the cost of the item, or margin is when we take that cash profit and we relate it to the selling price. Both of their uses, and I'll explain that in a few moments. Now, in the example we've just given, that's a £50 cost price, a £50 gross profit. So the markup is that £50 gross profit divided by the £50 cost price. That's 100% of a markup. Our trader, our business in that context, would typically say, as it happens for most businesses, is to say, here's the cost of the item, 50 quid. I want to add 100% of that as a markup. So the price of the customer is £100. Now, alternatively, in the retail trade, in lots of manufacturing organisations, in lots of different businesses, people prefer to express the profit in relation to the selling price. If I take that idea of £50 gross profit in pound note terms, I've sold it for £100. Well, 50 divided by 100 gives me a 50% margin. Now, quite naturally, you might be thinking, why have these two numbers, Mahmood? Surely we could just stick to one. Well, margin has evolved because sometimes businesses do not want their workers, their competitors to understand and know what the cost of the item has been to them. So margin is used quite widely. Also, margin is much more powerful because if we know the value of our turnover, the value of what we sell, and we know the margin percent that we're making, we can work out how much profit is contained within that sales turnover. So that's really quite powerful. Markup is pretty good because it's nice and simple. We know what something costs us. We can add a percentage to that, and that gives us our selling price. Now, folks, if these numbers seem a bit overwhelming, please do check out the notes. There is a link to a calculator whereby it's a free online calculator whereby you can punch in your numbers for cost, you can punch in your numbers for your desired markup or margin, and it will work out the selling price for you. One footnote, I should say, when it comes to selling prices, if you're VAT registered, remember you've got to levy VAT onto your client, but more of that in a future video. Now, lastly, why is gross profit such a powerful measure, such a powerful tool to use in your arsenal? Well, number one, it gives us that aspiration. We should always aim to at least keep and maintain our gross margin figures, because out of that fund is we fund and service our overheads. If there's any reduction in the selling price, any increase in the cost, or a combination of the two, our margins will drop, and that means it's a bit squeaky bum time when it comes to covering and servicing our overheads, and we don't want that. Gross margin can also be used widely in working out things like break even. Gross profit can also be used in making pricing decisions and whether we should sell more of a particular product, the mix of the products we have, and it's a really powerful insight into what's going on under the bonnet of our company in financial terms. So folks, let's summarise where we are. The idea of gross profit is we compare the cost of something against the price we sell it at. And that gives us your gross profit in pound note terms. If you want to relate that gross profit to the cost price of the item, it's called markup. If you prefer to express it in relation to the selling price, that's margin. Both are used quite widely and both have their different purposes. My personal preference, by the way, is to express things in margin, gross margin percent. It's much more powerful and it's much more insightful. Markup and margin, again, are used widely across different sectors. And lastly, gross margin, if you can get your heads around it, is really powerful to make decisions in terms of what's going under the bonnet, which products contribute the most towards our prosperity, and which ones drain on our resources. Understanding that is a really powerful way to power your business forward and understand where the pressure points are and the things that we need to improve and the things that are actually doing very well for us. Remember to check out the notes for the access to the free online calculator where you can play around deciding what price you should be selling things for, what things are costing you in the markup and margins that you generate as a result. Folks, I hope you found this video useful. I'd love to hear your thoughts and your feedback. What do you think? Do you calculate markup or margin in your business? Are there topics you would like me to cover in a future episode? And until next week, folks, ciao.